Welcome to another S&P 500 analysis. Today is August 28, 2021. Jay Powell spoke yesterday and he sent the market flying. Yeah, we all figured that he would, right? Especially all you out there doing these dip buying. And yep, lo and behold, the Fed chairman came through with his little lie. But regardless, the market just ate it up. In this video, we're going to take a look at the indexes and which one made new high and where are they heading. And we're also going to take a look at the market sentiment. How did Jay Powell change the sentiment, if any, and also the internals. Now, before I begin, let me clarify a couple things. First of all, I go through the weekly chart and also then I dive in a little bit more detail on the daily chart of the S&P 500 and the other major market indexes. The thing is, if you are an investor, pay attention to the weekly chart when I go through and describe the price action and what I see the market is telling us on a weekly basis. And if you are a trader, then pay attention to the daily narrative that I put forth, especially those scenarios that I present for the upside and the downside. Because as a trader, we have to keep an open mind and be prepared for whatever the market decides to do at that short period of time. And that's the reason why we are interested in both the upside and the downside possibility. We are not a predictor of what the market will do. Okay, no one could predict that. You could guess, but you can't predict. Right? So what we could do as a trader is to be prepared for the possibilities, right? Whether the market decide to go up or if it decide to go down, then we have some sort of plan. And if that scenario play out based on what we have planned, then we know how to trade the market at that particular time period. If our scenario doesn't come through and the market decide to do something totally different, then we know we just sit on our hand. So that is the difference between investing and trading. Investing, you want to look at a little bit of a longer period trend of the market. Right? Trading, you want to look at the near-term possibility of scenario on the upside and the downside. So with that said, let's start off with this weekly chart here. As you can see, the range for last week is actually only 63 points. So it is not that big of a deal in terms of the range for the S&P 500. And it gained 65 points or so. Now you might ask, well, how in the heck could it gain more than the range? Well, the range is the trading range that one could trade because it got a little bit of a gap open above the previous week close. Right? The range is basically, we are talking about the the lowest price and the highest price of the week. So that's the reason why sometimes we see a little bit of a discrepancy where the gain could actually be greater than the entire weekly range. All right. So last week, the S&P 500 gained a little bit over 65 points or 1.52%. Now, looking on Friday's action, it seems like it's much more bigger than that, right? Because we saw quite a number of stock, up multiple percentage. Okay. So, but in reality, the market did not really do that much, in terms of, price appreciation and also in terms of the range, because we've seen range over 100 points before, right? If you take a look at this week here, we have a range of 182 points. Now, also looking at the candle itself, it is a solid bullish candle for the week. And it is getting close to this upper trend line here. And notice that I have drew another line down here that represent a channel. So right now it's basically been hugging this upper trend line here on this particular wedge. Now, if the price decide to pull back in the near term and break this trend line here, essentially break down to the wedge, then we are basically looking for the possibility of the price might come down to this lower channel trend line here somewhere around this 4,000 area, a little bit over 4,000, maybe 4,100 or so, okay, on a near-term basis. So that's basically what we are looking at on a weekly basis. And as you can see, the low is higher than the previous week low, so we are one time framing up. Also, we have a ascending 10-week moving average over here, this green line, and also the ascending 40-week moving average. And the price is above both of these moving averages. So in terms of the weekly trend on a weekly basis, the S&P 500 is still in an uptrend. As you can see that you could see there's higher high and higher low. Here's a chart that I want to show you. Okay, this is a monthly chart, and I have a plot all the way back to 1975, but we're not going to go back that far away. Okay, we're basically going back to 1987, right, to the dot-com era right here, February 2000 here. And essentially, in that period of time, we seen the market came up. And then what we are interested in after the peak of the dot-com bubble, we see a little bit of a pullback of 50% before it make another move up, okay? Because what I want to do is essentially looking at this monthly chart here, I basically have put in a swing from the March low, 2009, all the way up to the present. And if it's going to retrace back just a little bit, over 20%, basically I got a 78.6, so you could put that as 80% or so. This is a Fibonacci retracement. I could go and change that to 80%, but I just want to keep it at what it is as a default right now. So that will bring the S&P 500 back down to 3690 or so. Okay, so basically 3700. And if it's going to pull back 50% from the current peak, then we essentially are looking at a level somewhere around 2590. So 2590 level down here. And also the other thing that I want to point out is look at the steepness, the slope of this ascent. There is no way in hell this is going to sustain itself. Now let's go and take a look at the sentiment and the internals. Here we are looking at the daily chart of the S&P 500 and the VIX, and also the put-call ratio. As you can see on Friday, we had a gain of 0.88% on the S&P 500 and closed with a new all-time closing high, and also put in a new all-time high. And you also notice that the sentiment, the VIX, came down from this 21 level to 16. We're just up above that 21 level a week ago, and right now is back down to the 16.39 on Friday. And also I put in a little bit of a level here, and it seems like the last couple of times when the VIX came down to somewhere around that 15 level, we see it starting to spike back up. So we might see it, in the next couple of days, come back down to this 15, and then we might see a little bit of a spiking back up to above that 20 level. So we'll see. And also the put-call ratio, there seems to be a little bit more call buying now. Remember last week we saw a little bit more of put buying and possibly some hedging, some hedges being put on to protect some position. But now we see that it is back down to this 0.55 area, and right now on Friday it closed at 0.5699. So apparently the market participant are feeling much more comfortable, much more complacent, and is ready to put on more risk. And here looking at the up-down volume ratio for the New York Stock Exchange on Friday, it was a respectable 5.8 times in favor of the up volume, and the advanced decline really did a great job. There was a broad market participation. The advancing issue led the declining issue by 2,246. So that is a very positive broad market participation on that move on Friday. And here looking at the New York Stock Exchange new high, new low on Friday, there were 132 more new 52-week high than 52-week low. As you can see, though, even though we did see a positive number there, there were 164 new 52-week high versus 32 new 52-week low. But as you can see, still, it's kind of be sort of declining in terms of number of new 52-week high. Since the May time period or early June, and we also saw the S&P 500 continue to make new highs since then. But also we noticed that the new low is also starting to creep up. Although we are seeing new high, seeing continuous new high on the S&P 500, but the internal strength there is not enough to push a lot of the stock into new 52-week high territory. So that is one thing to bear in mind. Now here is the New York Stock Exchange cumulative AD line. As you can see, I have drawn a line here. It's still sloping down, although it is only about 1,800 issue below this peak here. This peak is 18,664, and on Friday we closed at the 16,864. So that's only about 1,800. So if we get an AD, let's say next week, on Monday, if the market have a positive AD, that the advancing issue outnumber the decline issue by a little bit more than 1,800, then we essentially come up and resolve this negative divergence. Because right now you see that the S&P 500 is closing at a higher high, but the advanced decline is not. So that is a negative divergence, and that tells us that there is not enough of an internal strength to push this market up. If there are broad market participation and expanding market strength, then we would see this advanced decline, the cumulative advanced decline line, to making a higher high as the S&P 500 close with a higher high. And here looking at the Nasdaq 100, we see that the Nasdaq 100 closed up 154 point, or just a little bit over 1% on Friday. And also have put in a little bit of a channel here to kind of indicate that we could be possibly bumping up into this potential resistance, and we could see a little bit of a pullback, in the near term. And looking at the up-down volume ratio, although it was not as strong as the New York Stock Exchange, but it is still respectable. It finished with a little bit over 3.5 times more up volume than down volume. And once again, also just like the New York Stock Exchange, the advanced decline was quite strong on Friday, showing a little bit more broader market participation than recent past. And the advancing issue lead the declining issue by 2,359. And for the new 52-week high and 52-week low in the Nasdaq market, on Friday, there were 147 more new 52-week high than 52-week low. And, there were 205 new 52-week high versus 58 new 52-week low. But again, we're also seeing a little bit of creeping up on the number of new 52-week low being made in the Nasdaq market, while the number of stock making new 52-week high is pretty much constant on average, right? Somewhere around that 200 level. So once again, we are not seeing internal strength from the 52-week high to help push the index or the market in the Nasdaq to a new 52-week high, or to a new all-time high in this case. And for the advanced decline line, the cumulative AD line, the Nasdaq market, we are still seeing this major negative divergence. As you can see from this line here, this trend line is showing a lower high, while the Nasdaq 100 is printing a higher high. So again, we're basically still looking at weakness in the AD, in the advance and decline. So yes, the market sentiment is positive, and the risk is on. Market participant is still feeling complacent, not much fear in the market, and the market continue to push into new high territory. But again, complacency brings surprises. As a trader, be prepared for the unexpected. Now, before we take a look at the individual indexes price action in detail, I just want to show you this chart here with the multiple index. Here we are looking at the New York Stock Exchange Composite. These are all closing bases. As you can see that the New York Stock Exchange Composite did not close with a new all-time closing high last week. It's the last time that it closed with a new high. New closing high was back on August 11th. And also the transportation, the Dow Jones Transportation did not close with a new all-time closing high also. And the last time it closed with a new all-time closing high was back in May, on May 7th. And for the Dow Jones Industrial, it too did not close with a new all-time closing high on Friday. The last time it closed with a new closing high was on August 16th. And for the Russell 2000, although it was kind of impressive Friday for the Russell 2000 gaining, over almost 3%. And the last time it closed with a new closing high was back in March 15th. And the only indexes that closed with a new closing high was the S&P 500, the Nasdaq 100, and the Nasdaq Composite. So once again, you can see the domination or the influence from those large cap tech stocks. Now let's go and take a look at the price action for the indexes. Now let's take a look at this daily chart on the S&P 500. As you can see, it came up to this 100% extension last week. And now we're basically projecting a 2x extension up at this 45.45 area. And also, in addition to that, remember last week I put in this Fibonacci retracement, and it came down to 618, but above the 50% level, and then bounces back up. So we have this 127 extension sitting somewhere around 45.47. So for the coming week, just keep an eye on these two levels here, which is also in confluence with this trend line and possibly this 45.50 level. Okay, so that would be the upside scenario. And then on the downside scenario is to break this wedge and then come back down and retest this level here somewhere around 44.30. And if it could stay above this balance area, then we probably will see it bounce back up. But if it come back into this balance area, then look for a retracement back down to these lows. That's basically somewhere around 43.70 and possibly work itself down toward this 42.55 in the near term. Okay. So that is the upside and downside scenario for the coming week for the S&P 500. Now looking at the Nasdaq 100, we see the Nasdaq 100 came above this 1618, 15,233 last week. So right now we're basically looking to see would it continue to move up to this upward trend line here. In addition to that, we also have a 2x extension from this range. So we'd be looking somewhere around 15,950 if it could get up this high here. So, but the first thing first is we'll be looking at this trend line. So it'd be somewhere around 15,700 area and see would it be able to break this trend line. Or if it does pull back, then we're basically looking at this 141 extension at 14,850 and also this 127 at 14,584. And these two levels is pretty much in confluence with this particular supporting trend line here. So that would be the downside scenario that would be keeping an eye out for in the coming week. And for the Russell 2000, you can see that it is inching its way to this 2297 level that we've been talking about for quite a while to see would it be able to get back above that. Remember, we are talking about this retracement, chopping around inside this balance area. And it's bouncing back up. So if we could get up to this 2297, then we're basically looking to see would it be able to pop out of this retracement or this balance area and work up toward the all-time closing high for the Russell 2000. And if it unable to get back up above this balance area and break through and decide to pull back, and then the next level that we want to see is 2195, this particular level for potential support to see would it get a bounce back up and make another attempt of breaking out of this balance area. But if it doesn't hold this 2195, then we'd be looking for a retracement back into this lower level here in the balance area, this 2130 area. And if it breaks below it, then again, we'd be keeping an eye on this 2097. So those are the two scenarios for the Russell 2000 for the coming week. For the Dow Jones Transportation, it is still struggling or trying to get back up above this 15,000 area. And if we could get above that 15,000 area, then we'd be looking at this particular resistance here at the 15,340 areas to see if we'll be able to get above that. Then we be looking at the possibility of maybe the transportation will resume its upward trend to another new all-time closing high. But if it's unable to get above this 15,000, then we are still looking at for a pullback to the 14,242. So the upside scenario, 15,000, and up here to this 15,400 area, or come down and to the 14,242. And the Dow Jones Industrial also kind of came back in and pushed back up again. So out of this balance area, and right now it is sitting above it, but unable to get up to the all-time closing high. So next week we'll see will it be able to get up and put in a new all-time closing high. If it doesn't and it come back in, dip below this 35,150, then watch for this thing to work its way back down to somewhere around this 33,800, 33,700 area to see would it be able to hold this balance area. And if it doesn't, then we'll be looking at this 33,000 level. Now, just to get some perspective on how broad the market participation were on Friday, you can see that the New York Stock Exchange Composite Index, this is the index of all the 3,000 plus stock that trade in the New York Stock Exchange on a daily basis. And here you can see that it is still below this all-time closing high, this 16,875.09. So basically, keep an eye on to see would it be able to come up and put in a new all-time closing high. If it can't do that and dip back below this 16,708, then we better keep an eye on this level here at this 15,775. So then we know that that last push from the S&P 500 and Nasdaq 100 is really just a little bit of a bear capitulation, maybe, or the short capitulation. We'll see. So let's take a look at the SPY, the ETF for the S&P 500. You see that is coming up on this trend line here, potential resistance, and sitting up at this 1618 near the 450 level here. So there's a little bit of a high volume node here. I'm not sure, is this a a supply or demand, imbalance of supply or demand here? So we kind of keep an eye on it, because if it is getting extended long, then don't be surprised to see a pullback and possibly get back into this 445 area. This 445 is the composite value area high. Remember, I got this composite profile here. So right now, it's basically coming up and book out of this value area and try to move up. So if it unable to break this trend line and move toward this 452.75, which is the 200% extension off of this balance area here, right? So basically did a range extension to get some idea where are some of the potential target level to keep an eye on. So if we see that it is unable to get above that trend line, then look for a pullback to this 445 and essentially coming back into this value area here. And if it does, then the next level to keep an eye on is this composite point of control at 442.49 or 0.47 area. So essentially 443. And here's the QQQ, the ETF for the Nasdaq 100. So we're looking at this balance area here that it was bouncing around and broke out of it. So right now we're essentially projecting this range here, this 100% range extension for a potential target level, and that would be somewhere around 379.23. So keep an eye on that levels to see would it be able to come up and take out this level here in the coming week, or would it come back in and dip back inside of this value area and essentially coming back into this balance area, this balance zone. Then we'd be looking at these level here, this 369, and this 368, 365. So keep an eye on this 365 will probably be a little bit critical if it comes down, because it's also in confluence with this trend line here, this potential supporting trend line. Okay, let's take a look at the 10-year yield. You see that the 10-year yield came down a bit on Friday, closed at 1.31. So right now we're essentially looking to see what it continue to pull back to this 1.2 level. If it doesn't pull back to toward this 1.2 and reverse back up, then we'll be looking at this 1.46 break above that. And I would not be surprised to see a 1.5, 1.6 level on the 10-year yield before the end of the year. And here's the US dollar. The US dollar pulled back a little bit. We'll see, would it be able to hold this trend line and work itself back up toward this 94. And if it breaks this trend line, keep an eye on this 92 level here. And here looking at crude oil with the dollar weakening a bit, and we see that the crude oil came up a bit. So right now, I want to see, would it be able to work itself up to this 75 area if the dollar continue to pull back to that 92, or if the dollar push up toward the 94, then I'd be watching for these two levels here for the crude oil 64 and 61.50 area. Now on Friday, after Powell's speech there, we see the precious metal market caught a bit. You see that the silver came up and closed at 24.11. So we'll see, would it be able to get up to this 24.71 or come back and retest this 22.75 once again. So still inside of this zone here. So basically looking for another potential test of this 22.70 area to see would it be able to hold. And if it doesn't, then be looking at this 19.60. Because there's this trend line here. So if it come up here at this 24.70, you still need to see would it be able to get above that zone and get a nice push up to this 26.67 area. So watch that 24.70 to see will it be able to break above it or get rejected and push us back down toward this 22.72. And gold really got a bit on Friday, so you can see that it broke above this 1804, and now it could be working its way up to this 1846 or toward this trend line here. You see, would it be able to break this trend line? If it does, then it'd be 1923. Now, I'm still waiting for this thing to come back in down to this 1716 area, into this zone before I look for a swing trade long up, back up to this 1804, and then work itself toward the 1923. So if it breaks this trend line without pulling back, then maybe I would be missing this trade. But hey, that's okay. I just wait for the next one. So, but I'm still looking for the possibility for this thing to pull back, for gold to pull back to this 1716 area. And here's the heat map for the S&P 500 on Friday. As you can see, majority of the stuff is green on the S&P 500 except for the healthcare, right? The biotech, a little bit of that. They've been pretty strong recently, but right now it seems like maybe they are pulling back a little bit due to seeing a little bit of a peak from the Delta variant infection rate and that kind of stuff. So we'll see, but definitely all these large cap tech stock is moving. We all got the financial joining in on Friday. Consumer discretionary also jump in, and we got the energy bouncing back, material, and also the real estate. Now the consumer stable is kind of mixed, right? And the industrial is a little bit mixed. And here's the heat map for the Nasdaq 100 for Friday. So once again, it's just a reflection of some of the stuff that we saw on the heat map for the S&P 500. All these large tech, semiconductor also came back pretty strong on Friday, except a couple of the issues but majority of them like NVIDIA, AMD, they were all strong. And also Tesla came back and got a bit also and up 1.53%. Even Amazon was participating in the upside move on Friday with a gain of a little bit over 1%. Now, again, though basically the healthcare, consumer stable, industrial, utility, a little bit soft on Friday, but overall, all these large cap tech stock is the one that is moving once again on the S&P 500 and the Nasdaq 100. And here, as you can see, the reason why the Russell 2000 was such a strong performer on Friday, the Russell 2000 was up 2.85%, a 63-point positive on Friday, 63-point gain. And you can see this heat map is almost entirely green, right? So, every sector in the Russell 2000 is green, and that's the reason why. Let's take a look at this chart that I set up using TradingView. And what I want to show you is essentially the days before these, between these lows. Right? If you notice in the recent past, we see, like, for example, from this low to this low, there's a, between, 37-day or 26 trading session. And between this one here is 20 trading session, and this one is 23. And so I kind of use 21 as a mean, right? Because if there's somewhere around there, it's maybe, from these last three, except this one here is 33 trading session. So if I take these and that will be put it somewhere around 22 days, 20, somewhere around there. So I basically just use 21. And if I project that 21 trading session out, then that would be somewhere around September 20th. So that's probably where we might see the next, pullback low, right? Maybe on September 7th, on September 20th. Also, the other thing that I want to point out is, if we take a look at this, the pullback is only 3 days, right? 3 trading sessions, right? On this one here, right? Same here, right? It's 3 trading sessions. Although, yeah, we got a little bit of a down day, but, it's basically part of that little peak that we're talking about, right? Same here, right? 3 days, okay? Right? If you want to count that, we basically could count it as 4, and this one is 3. But in regardless, it's pretty much 3 days pullback. That's it. And even on this one, yeah, we opened down. The recent one, we opened down, and then we closed back up, right? So if we are talking about a 3-day pullback into the low, then if we are expecting to see a low, the next low, and on September 20th, and I believe September 20th is a Monday. So if we back it up by 3 trading session, then it will be somewhere around September 16th, I believe. Okay, so maybe we see a beginning of a next pullback on September 16th. Who knows, right? We'll see. If the S&P 500 continue to stay up at this upper trend line territory, then we probably will see this market continue to grind up, for the next couple of weeks before we see another maybe 2% pullback or so, right? But who knows if this time break this wedge? Then remember the earlier chart that we looked at, that I have a channel join in, and that could be the next potential level of potential support if it break this wedge. Okay, finally, let's take a look at the ES, the E-mini S&P 500 future, the profile chart here. Let's take a look at the market profile, and let me zoom this in here and kind of highlight some of the level to keep an eye on for the coming week. First of all, it finished the week on Friday, finished with a poor high at 45.10. This poor high is also the all-time high. And this poor high will likely get resolved, and when it does, that means it has to come up at least 2 tick above that high, and that will take out this high. Then basically we're going to be looking at another all-time high by the E-mini S&P 500 future and that implies we're going to see another all-time high on the S&P 500 cash index. Now, also there was some single print that is left behind as well. So we could see a little bit pullback. If we do see a pullback on Monday, then we probably will see the single print get filled and also come down, and could come down and tag this poor high over here at 44.65 that was put in on August 26th. So those are some of the critical levels to keep an eye on. Is this poor high at 45.10? If it get above that, look for it to get tagged and put in a new all-time high. But if it decide to come back down, then look for the single print between 44.92 and 44.84 level to get filled. And if it break this and take out the low, last Friday's low, then look for this poor low that was put in on August 26th at 44.65. Now also notice on the volume profile, you see this P-shaped profile. That kind of tell you it's a little bit more of a short covering rally, because you see this, not much volume going to up here. So this is more of a short covering. It wasn't a trend day. It's basically a short covering type of rally coming up. And right now it's sitting up here a little bit extended. So we probably will see a little bit of a liquidation break on the, on Monday or something. So we might be able to see that. Just keep an eye on that. So just be aware that there could be another new high, okay, based on this poor high here. So, and also pay attention to the Globex trading on Sunday to see would it print a new all-time high during Globex trading session. So that is this week's review and update. So did Jay Powell send the market flying? Not really. Not really. I think it's just more of a capitulation by some of the shorts. So we'll see how much of a remaining buying power there to push the market higher, because if you got a lot of the short cover, so you don't have those buying power to push that market up when they cover the short. And if most of those short is capitulated on Friday after Jay Powell's speech, then I'd be watchful of how much more of an upside potential there is. So be careful. And thank you for watching. Be sure to smash that thumbs up to help me promote and share this video. And stay safe.